did everyone put it in that? Okay.
Oh, yeah. Oh, yeah.
All right. So today we have Scott Halverson with A+ Mortgage. JSG has been in a relationship with how long? Like 5 years, something like that. He's kind of our go-to lender. Honestly, if Scott can't figure it out, I don't know who can. And the most important thing when you're working with anyone is customer service, how quickly they can get back to you, how they take care of your clients because you're handing them over. And this is probably one of the most nerve-wracking parts of being a buyer is going through the lending process. It gets pretty intense, and there's a lot of information they're going to be asking up front, and so the communication has to be great, and also their rates and their service have to be top-notch. So therefore, Scott Halverson. Sure. I'm going to move out because you're moving. Sure. So if you just want to tell us a little bit more about yourself, Scott, and then we'll roll it along.
Everybody see me okay? Hear me okay? All right, well, good morning. So like Janine said, been working and partnering with the J. Schmidt Group for probably about 4 or 5 years now. I've been in the business myself about 18 years, so I've seen it all. I've seen all the ups and downs and all the mortgage guideline changes and everything else. But I'm with A+ Mortgage Services, I would say one of the largest privately held mortgage companies in Wisconsin. So we do a lot of business, but we're not too big that we can't be nimble and quick and do emergency closings and things like that, like some of the big box banks and the mortgage companies with rockets and things like that. So, but yeah, certainly happy to help any one of you with any questions you guys have, clients, buyers, what have you. I'm certainly happy. I'm kind of available 24/7. I understand that real estate happens after hours and Saturdays and Sundays, and I definitely make myself available for that. So if anybody needs anything, feel free to reach out.
Okay, well, we're going to start off with the first question. All right. In a perfect world, how can an agent, should an agent reach out or follow up? So in a perfect world, how can an agent or should an agent reach out or follow up? I'm assuming with you.
To the lender.
Yes, to the lender. Good
Well,
question.
Yeah, that's a good question. I guess it's from A to Z, right? So in a perfect world, from my standpoint, you're prepared with your buyer with a pre-approval up front, right? I understand that always doesn't happen, but get ahead of that game, right? Happens all the time. I get phone calls, hey, need to make an offer in 2 hours. Of course, it's a Sunday and it's an emergency, right? Which is fine. I'm happy to help with that. But I guess in a perfect world, that pre-approval is already done. So starting with that, I would try to get your buyers prepared with a pre-approval. Once you have an accepted offer, obviously your support team sends me that offer. Then quite honestly, it's up to me from there. I'd like to know when inspections are scheduled, because I usually order the appraisal based around when the inspection's scheduled. Lately, I've changed that theory a little bit. I just start ordering appraisals because they're taking a couple of weeks anyway. But really, in a perfect world, if you need to reach out to me many times during the transaction, then I would say that I'm not doing my job, right? It's up to me to be telling you, hey, here's where we're at. I've ordered the appraisal, providing you commitment, things, letting you know when the approval's been done. With the J. Schmidt Group and Keller Williams in general, don't hear from the agents very often, and that's totally fine because you have your coordinators, the Bevs and the Nicoles and the Elizabeths and the Sarahs and whatever. So I'm in pretty constant communication with them. I would only really say you and I are talking if there's probably a problem.
And so the hesitancy to order the appraisal when he's talking about has the inspection contingency been met? Because sometimes they fall apart during that home inspection contingency. So if it doesn't work out, that's kind of the last leg prior to the financing contingency. So if it's gonna fall apart, it's gonna fall apart there. So therefore, you know, that's where that
Some
question
people
comes
think
in.
I don't want to order the appraisal because I'm worried about the $400 appraisal fee, and that's really not the case. What I'm worried about is appraisal comes in, the next day I get an inspection amendment and the price has changed.
Yeah.
Okay, guess what? The appraisal's not wrong, right? So what if the price goes up and we already have the appraisal? I can't call the appraiser and say, hey, you appraised it for 400, which was purchase price, but now it's 420. That's kind of a problem. He can't go, oh, I'll just change it then. It doesn't really work that way, right? So we try to kind of coordinate the appraisal time frame, if possible, after the inspection. Now, if the inspection takes a while and you guys are negotiating and that gets extended out, at some point I just need to order the appraisal and I just do it, right? So other than that, I guess I don't need too much communication from you guys. I mean, as long as I got the accepted offer, all counter offers, all addendums, all whatever, then I'm off and running. Then I'll be the one in touch with you guys. Then, yeah. Or your coordinator or whoever.
In a market such as this one, what is the preferred credit score for an FHA and a conventional loan? What is the credit score that is not going to work? Like
Cutoffs.
Cutoffs
Is probably what you're saying.
Yeah, what's cutoff?
640 in general for conventional. We can work with less, but ideally it's once it gets under 640, then we're pulling some strings, really, quite honestly. FHA, technically FHA allows for as low as I believe 600. However, most lenders have their own cutoff for FHA at about 620. That again, under 620, we're starting to pull some strings again. Yeah. So 640 for conventional, I would say. 620 for FHA is kind of the standard. Again, something comes in less than that, doesn't mean we can't do it. We just might need to massage a few things and change it up a little bit.
What information do you share with the agent regarding the client's loan information?
What information do I share with the agent about the buyer's loan information? Well, you need the pre-approval, number one. You need to know what type of program, conventional, FHA, government, VA, whatever, because that goes on the offer, right? What they're pre-approved for. But I think you're asking more specifically, I guess I don't share credit scores or debt to income ratios. I don't share their income. I don't share any of that. If there's a problem, I'll probably modestly explain to you why there's a problem. It's credit related, but I won't get into specifics like, hey, they just got out of a foreclosure or something like that, you know. But
This is super important when you're working with people that you know, because there is some hesitancy on the buy side and sell side, especially if they're first-time home buyers. I would say 90%. That they know you personally and they don't necessarily want you to know their financial situation. And I will tell them, listen, I know nothing. That is your conversation with the lender. All I'm looking for is the pre-approval, and we're going to go from there. I am not privy to your financial status. So,
99% of the time they're pre-approved, lickety split.
Yeah.
And there's no discussion that needs to be had, really, that you really should know about. Yeah.
When you're saying pre-approved, is that through, like we talked about last time we talked, was the big guys, the big banks, the Quicken Loans, but if they're pre-approved through them, does it always work like that? You know what I mean?
Well, I know, like the Rockets and the Quickens, you can do your own pre-approval online.
Which is not
crazy.
Yeah.
That's crazy. Yeah.
Yeah.
Because it doesn't pick up the increase. What's the word I'm looking for? the idiosyncrasies, what's that word I'm looking for?
Idiosyncrasies?
Idiosyncrasies, right. I mean, you can plug in, this is what I make. Well, are you hourly? Are you salary? Does your hourly fluctuate? Are you bonused? Are you commissioned? All of that is a huge factor. And so, but I guess what I'm saying is, you know, if I pre-approve somebody and it's super quick and super easy, there's really no discussion that needs to be had. I just say, here's your buyer's pre-approval, good to go, go find them a house. If there's a problem, what do I share with you is probably vaguely what the problem is. Like, hey, debt to income ratios are way too high. They need to look at something $200,000 less, or got some credit challenges. I might need a couple of weeks to fix this or something like that, right? But I don't really get into specifics. I'll at least kind of let you know why I'm not issuing a pre-approval, right? Because you're probably waiting to show them a house or something. So I'll let you know, hey, we got a small problem because of this, but nothing too specific. Yeah. Never do I share incomes or anything like that.
Just a quick question. So outside of someone bringing a pre-approval to you, do you, the A+, right?
Mm-hmm.
You guys also offer pre-approvals and pre-qualifications as well? Just
Oh, for sure, yeah.
Mhm.
I highly encourage it. Yeah,
Yeah.
yeah,
But
for
you
sure.
can also, if someone brought a pre-approval to you, you work with outside lenders as well?
Well, if they bring me a pre-approval, I mean, that's not valid for me, but I'll still do my own pre-approval and I can still work with them. Sure, absolutely, yeah. Well, I guess what she was saying is, you know, in this competitive market, you want to have the most competitive offer,
Right.
and tandem to that would be the most competitive pre-approval, right? So if you're in competition with somebody, one's got a Rocket Mortgage pre-approval and one's got a local lender like A+, you're the tiebreaker. You're going to win because nobody wants to take that Rocket Mortgage pre-approval.
Nobody.
Yeah.
So,
Ask Maggie Meyer.
Yeah.
so I'm assuming, and again, we talked earlier, like, when we have buyers, we probably should recommend not using
Yes.
a Rocket Mortgage or a Quicken Loans
Oh,
to
correct.
go to
I got
your
many agents.
Associated Bank or a.
And I'll tell you, I'll say, listen, your lender could be the decision maker between you getting this house and not. You need to use a local lender. Their underwriting department is not here locally. Agents are super savvy. They absolutely know who they're going to be comfortable working with to get this through. And I, as a listing agent, will 99% of the time choose one that has a local lender because I know it's going to close.
Yeah, so I see both sides. So many agents call me. It could be a buyer agent. Go, hey, I got a buyer, I got a client. They have a Chase pre-approval. Yeah, double check them. Here's their phone number. Even on the listing side, hey, I got an offer that came in from Rocket Mortgage. I'm gonna have them call you. You know,
Yeah.
They just don't trust that.
They don't.
So, and it's been like that for years, really. But it's getting even worse.
Every time you run a pre-approval, is that a ding to the credit?
Technically speaking, yes, it's what we call a hard credit pull. Yeah, and that's a very common question, actually. Some buyers are hesitant to do a pre-approval because of that.
Right.
It's somewhat of a myth. Okay, yeah, I mean, I've been staring at credit reports for 20 years. It only dings your credit score if they become excessive. Okay, if you have one or two for a mortgage pre-approval, that is not going to affect your score. How it works is if you bought a car loan or bought a car and there's a credit inquiry for a car 1 week, you bought furniture at a department store and there's an inquiry the next week, and then you opened up a credit card the following week, 6, 7, 8 within a 30-day period, that's a problem. One or two in a 1 or 2 week period, not a problem. Yeah.
So if they did go to a big bank first and get a pre-approval and then come to you, it's.
I see it all the time.
Yeah. And they're going
And it's
to.
for the same reason. And trust me, the credit algorithms for the 3 credit reporting agencies realize that. Mortgage inquiries usually show up as what we call factual data, and that's internally we know that that's a mortgage inquiry. And even if it doesn't say the bank name, because factual data represents only mortgage industry. So the 3 credit reporting agencies have the algorithms in there to know it's the same reason. It's not a different reason. So if it's 2 or 3 mortgage inquiries, it shouldn't be a problem. Yeah.
do have one other question.
Yeah.
So I was working with a potential buyer, and I sent them your information. So would I contact you to be like, hey, did XYZ
Yeah.
contact you for a pre-approval? Just because
absolutely.
okay.
Oh, yeah. Good question.
Yeah, give me a call, a text, a heads up, hey, I sent John Smith your way, let me know when he calls you. Then when he calls me, then I know it was you, and then because then if I do a pre-approval, I'll be like, well, who needs to know this?
Right, where did it come
That's what I
from?
was wondering.
Where'd it come from, right?
Good question.
Yeah.
Very good question. Yes,
I know I
Amber.
have to look at them, sorry.
No, oh.
Would you consider credit unions as a local lender? I know a lot of people kind of prefer to go that route as well.
Yeah, and I really have no knocks on credit unions, to be honest with you. They're usually pretty aggressive. Their rates aren't always, I can usually be more competitive on the rates and all that, but they're a little, I would say, yeah, that would probably be a decent source. Yeah, I mean, I'm just being honest. I mean, like the Landmark Credit Unions, Summit Credit Unions,
Mhm.
the bigger ones, I think they would be considered somewhat reputable, yeah.
How do you know the current rate or if it changes? How do agents know?
How do agents know?
Yeah.
Yeah, so, and this is a good question,
It's a
actually.
great question. These are all.
You know, back in the day, the big thing lenders would do is, send you guys, like, we'd have like an email list and we'd send you guys rate sheets.
Yeah.
And we would update those every 2 weeks or something like that. Due to compliance reasons and changes to all of these laws back in 2008, we can do it, but it's a big pain. It legally, for compliance purposes, I can't just say, here's the rate today, because it might not be your buyer's rate today, right? So the CFPB's gotten really into that.
Mm.
But I would be happy to do that. There's ways of us to do that. So we can do rate sheets. Otherwise, certainly contact me, let me know. But I think, it's all over. I mean, you should be able to easily find a ballpark generic rate for what mortgage rates are currently.
What is it today? Like,
Yeah, so 3.5 to maybe slightly under, depending on the right situation. At the end of last year, we were still a little under 3%.
I believe
We
that.
jumped up pretty darn quick at one point. The first 2 weeks of January were tough. We jumped a half point. That's a huge jump in the mortgage world. We settled down, cooled off, and now we're maybe even slightly under 3.5 again. So still fantastic.
Where do you see it going? I know if you had a crystal ball in the next 6 months.
I think we're flat.
Okay.
I really do.
Okay, good to know.
One thing to caution about, though, is, we all know the feds have openly admitted that they're raising interest rates this year 3 or 4 times, okay? Don't freak out about that, because that has absolutely nothing to do with mortgage rates.
And everyone thinks they do,
Right.
so you hear it on the news, and then so this
So
is
then my
great.
phone starts ringing off the
Yeah.
hook. Okay, did rates just jump a quarter point? No, they didn't. So when the feds meet and they have a Fed meeting and they decide to raise the rates, they're raising what we call short-term rates or overnight banking rates. That's going to immediately affect car loans, credit cards, student loans, personal loans, things of that nature. It has nothing to do with mortgage rates. Now, in time, will it affect mortgage rates at some point? Indirectly, possibly. But mortgage rates are more based on the 10-year treasury. So, at my office, I've got 4 screens going at once. I'm watching the stock market, I'm watching the 10-year treasury, so I've got to have my thumb on it all the time. So we're flat. I think we're going to be flat. I mean, our economy really can't sustain rising rates right now, all this stuff going on and unemployment and COVID. And, think about if mortgage rates jumped to 5-6%, that would be a tragedy.
God,
right?
it would be a tragedy.
Right. So even though that's still historically low, I
Yeah.
just all the experts agree that mortgage rates, at least short-term rates, are going to go up. Home equity loans might go up. Standard mortgage rates should be pretty flat.
Okay. An investment property, what would that, that's a higher interest rate, more than likely, correct? And what does that look like?
Absolutely, no doubt about it.
So when you're working with investors,
Yep. So investment properties, it is what it is. It requires larger down payments without question. And there's certainly higher rates, but probably 3/4 to a full point over normal. So if today's rates are 3.5 on a conventional primary owner occupied property, figure 4.25-ish, 4.5 for an investment property. Now, I'm going to elaborate on one thing on that. Second homes, this is new, we'll cover this next week.
oh, yeah.
Okay, this is brand new. New for 22. And this just kicked off this month, actually. So second homes, right? Something on a lake, something on a golf course, something in Florida, whatever the case may be. Those were always treated the same as a primary property. Rates were not different at all. Okay, it required a little bit of a different down payment situation, but the interest rates were equivalent to a primary property, right? A little surprising, actually. I think Fannie and Freddie have caught on to that. They are now equivalent to investment properties.
Oh.
So a second home interest rate and an investment home interest rate are now similar, if not the same, pretty much.
Okay,
So
that's new.
that's new.
That's a new
Yep,
one.
That is new.
Does that fluctuate more than, so when you talk about interest rates for primary residences, is the market and the percentage, does that fluctuate?
More wildly than a primary
Yeah.
property? No. Except on second homes, literally in a week, they announced that Fannie and Freddie announced that hey, listen, we're done with the same rates on second homes. They went up overnight, like a point overnight. But that's it. Now they reset it and it's done. But they don't change more rapidly or wildly than a primary property.
So if I was working with somebody who said at a different mortgage company, different lending company, and they said that the investment rate was 5.5, who sets that? Is it company specific?
Whichever investor that they're using.
Okay, it's
so
them, and they say this is what I want for it.
well, depends on what kind of bank it. I mean, if it's a portfolio loan, they're making up their own rates. I mean, if they're using a normal conventional loan, that means they have an investor or a servicer
Yeah.
somewhere in the background, and
Right.
they're quoting their rates. Yeah, so yeah.
So that investor would want to be competitive, but he'd still say,
Yeah.
you know you're going to pay more, so I'm going to set it
Right.
higher. Okay.
Well, 5.5 would be ridiculous, though. If that's something that somebody really got quoted, that's insane. That's super high.
It is.
Well, unless there's something going on that I'm not aware of.
I love this question, sorry. What are your main pet peeves that agents have a bad habit of
Oh,
doing?
gotta go.
You have all day?
Pet peeve, boy, can we not use that word? Because,
Yeah.
Boy, I gotta think for a
I mean, I
second
could
on that.
give you a list of my pet peeves with agents, not communicating, basically doing both sides of the transaction,
Well,
but
not
yours is so different.
Well, not communicating, and I don't necessarily mean it from a phone call or an email standpoint. Last minute surprises are tough.
Last minute surprise. So
So-
give us an example of that.
Yeah, so, just happened a couple times recently, and I'm not gonna say if it was Keller Williams or not. We're at the end, totally at the end, okay? Cleared to close, we're getting ready to prepare closing documents. Literally the closing's in 2 or 3 days. We get the seller side's closing statement. There's a $2,500 seller credit on it, okay? Well, news to me. Call the agent and say, hey, we got the seller's closing statement. There's a seller credit on there that I'm not aware of. Oh, I must have forgot to send you the amendment. Okay. I get the amendment. Guess what's also on that amendment? A crap ton of repairs that we weren't aware of, right? So I'm missing a $2,500 seller credit, and apparently now I'm missing a bunch of lien waivers and invoices. And we're closing in 2 days. But guess what? When that happens, we have to go all the way back to underwriting. Okay, that's a huge mistake.
Wow.
So last minute surprises are tough. I wouldn't call it a pet peeve, it's just something we gotta be aware of, I guess. What else?
So every time there is a change in the offer that Scott has in his hands, especially
Numbers.
numbers,
You could almost
number
forget
related.
a repair amendment unless it's like super major.
Right.
But if you don't send me a repair amendment that says, you know, seller to paint the trim around the kitchen window, okay, not a big deal, right? But for sure, if numbers are changing, or a closing date's changing, but most importantly, numbers are changing, whether that be a purchase price or a seller credit, I have to see that. Because guess what, if I don't, we're gonna get to the closing table and we're wrong, and we're not closing, right? So, for sure, if numbers are changing, I need to have that amendment, preferably sooner than later. I guess another pet peeve, this might be a pet peeve, getting a repair amendment, and I noticed that this amendment was done 3 weeks ago,
Yeah.
okay? Why did it take you 3 weeks to send it to me? So now I'm scrambling, right? Now my underwriter's scrambling, like, but, oh yeah, we've had these lien waivers and invoices for 3 weeks. Okay, well, where are they, right? We're a week from closing and now you're surprising me again.
Do you put the slap down on those agents if it's consistent?
I don't think it's consistent. I don't think it is consistent.
It isn't? Okay,
But
it's
it's just, you know, trust me, I'm savvy enough to look at the date of this amendment. If it was 3 weeks ago or 2 weeks ago, I guess I'd kind of go, why are you sending me this now?
Mhm.
Right?
Yeah.
So, but other pet peeves, I don't know.
And typically, if you don't have a contract to close, like we do on our team, but if they're Renee with Focus Title, she makes sure that, you know, she has all the amendments and she's watching over that transaction. So hopefully that wouldn't happen with you at KW if you're using a transaction coordinator.
Right. Otherwise, I don't know if I have any specific, what were your pet peeves?
Oh, with the lender?
No, you said you have agent
Oh,
pet peeves.
yeah, well, working with, there are a few agents that they're sending an offer over and you're looking at that agent and it's a habitual, I'm gonna be doing both sides of this transaction. This agent will ask you to write up amendments that they should be writing up. It is just, you know what you're in for, so that's a pet peeve. We just had someone from our team that had the same agent, same situation, and I told the agent on our team, you know what I did the last time, my 4th transaction with this agent? I said to the agent, not a KW agent, I am going to make sure that I stay in my lane and that you stay in your lane. So don't ask me for an amendment to be drafted that is coming from your buyer. I just want to make sure that we are really clear on that. And she went, oh yeah, okay. I said, okay, just so we have that squared away.
She was asking you to
Every single thing.
draft things for
Yep.
her.
Oh yeah, my buyer wants this on the great, send it over.
But she wanted you.
Could you write that up? No, I'm not your buyer's agent. I am the listing agent. No, you're gonna draft it up. So that's kind of a pet peeve. Or, and we talked about this, I think at our Monday meeting, getting that offer accepted, and they waived home inspection because there was a pre-home inspection, and now they want to come in. The buyers want to come in and go through the house again, and we don't have the earnest money yet. That's a pet peeve.
Well, so on that note, so answer to this though, when do you not do an addendum A?
I always do, even if there isn't any testing contingencies, because I like the information of the agent on the bottom.
Page 4, right?
Yes.
Okay.
So I always say
I
attach an
guess
addendum A.
incomplete, or, you know, I have not a KW agent either, but an agent I work with every single, and she doesn't have a coordinator, she's working on her own.
Yeah,
The offer to purchase is just
sloppy.
massacred. I mean, it's gotta get fixed every single time.
Yeah.
You know, like even I catch it. Like it doesn't even have to get to underwriting to get, I'm like, seriously, okay, missing initials. Was this counter? Where's counter 2? It says counter 3, but there's no counter. You know, it's just a mess. And I guess I do like getting addendum A's because otherwise then I'm chasing down license numbers and
Yes.
blah, blah, blah. Right.
So that's a very good point. That's a very good point. So addendum A is typically used if there's a testing contingency, right? So you would say check addendum A. I have seen from other brokerages that it's not attached in the offer to purchase because they're not asking for a testing contingency. But on the last page, it's asking for your license information, all of your email address, blah, 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 and then that co-broke's information.
Both yours and your company's.
Yes,
Now,
so it's a tight little,
well, why is that a big deal? Because legally speaking, it's gotta be on our paperwork. It's federal law,
okay,
okay?
learn something new.
So if there's no addendum A, then it's fine, I'll have my system do it or something, but we're chasing down license numbers for, well, 4 license numbers, addresses, phone numbers, emails. It legally, literally has to be on our mortgage paperwork. All parties to the transaction and their licenses, including me, including you, including the listing agent, title companies, all of that has to be on our paperwork.
Janine, this is more of a question for you, I guess, because I'm not 100% identity. Is there a box to check that says waive? Like, people that don't
You just don't check it.
You just don't check it.
You just
so
don't check
there's not an opt-out or opt-in.
Right, you
so
just
that's
don't
why
check
people don't
it.
use it, because there is really no box.
Right,
But you do because all the information. is
yes,
Okay.
always, and that is a really good point. I'm glad that you brought that up. Okay,
There's a question in the chat too.
oh, okay. Sorry, I have like weird context in today. What is your best advice for first-time home buyers in a 650 to 680 range? Down payment assistance, type of loan, grants, question mark. Okay, first-time home buyers in the 650 to 680. Would it be the same with anyone?
Yeah, so I don't typically deal too much with grants and down payment assistance programs, because in the end, they still have to put some glue into the game, right? It doesn't give them their full down payment. So I guess I'm not exactly sure what you're asking, but 650 to 680 range should be perfectly acceptable for a conventional mortgage. Now, if you were to ask 9 out of 10 lenders, what's the minimum down payment on a conventional loan, they would say 5%. However, I have conventional loan options at 3%. And most lenders would tell you that, no, Scott's lying. There's no, trust me, I do it all the time. We have a direct relationship with Freddie Mac, which is kind of unusual. Not many mortgage companies in the state have that. It's called a Home One program, and it allows for a 3% down payment on a conventional mortgage. A lot of people say, well, 3.5 at FHA, that's great too. But I have 3% conventional. So even if you're using WIDA or a down payment assistance program, they're still coming up with something probably close to 3% anyway. And I have those options. So, but the other advice to first-time home buyers is, a lot of mortgages are done over the phone, through email. You're on your second or third house. I don't meet you till the closing. First-time home buyers, I always recommend come and meet me. Let's schedule, because there's a lot to go through. I mean, there really is, if you don't really know. Or, we can schedule a phone call for 20, 30 minutes and we can talk from A to Z and get some questions answered. But again, get out in front of it. First-time home buyers, I never shy them. I love them. And they're normally very qualified. They just don't think they are because they don't know what they're doing. You know what I mean? And then they get to me, I'm like, this is a no-brainer. What are you guys worried about?
All right, I have a question. Let's say that Katie sends over a buyer to you and you're getting him pre-qualified and she gives you the heads up and you guys are working on it, and then all of a sudden, maybe a couple months down the road, you get these people under contract and it's with a different agent. So an offer came through, people that you've been helping, Katie had sent them to you, and now you see, oh, someone else wrote this offer for him. How do you handle that?
I would certainly let the original agent know.
Because it's happened, hasn't it?
I don't recall lately.
But it has, I know it has in the past.
Probably.
Yeah.
That won't happen to me, no, I'm just kidding.
No, of course not. But it does, I mean, it has happened.
I'm trying to think. Can't recall anyone recently.
Not recently, but I do recall in the past, you would say, oh my gosh, I think it was an agent on our team that you reached out to and said, this is a while ago, hey, FYI, I got these people under contract, but it was with a different agent. And so that is, hey, did you have buyer agency with this particular buyer? And, you know, what happened? It just,
Oh, you know what? Real quick, let's back up a minute.
yeah, let's back up
Pet
a
peeve
minute.
question.
Pet peeve.
Buyer agency.
Buyer agency.
Okay,
Woo!
if you've got a 295 fee on there and you don't give me the buyer agency, I don't have any clue it's on there.
Buyer agency contract?
Well, a lot of you are charging a buyer,
Yeah, I mean,
295 buyer
you
agency
need
fee.
a contract as part of the.
Yeah, so and this isn't, I mean, even the coordinators, I've reminded them 1,000 times. They send me, hey, congratulations, John Smith has an accepted offer, here's the full package, and there's no buyer agency. I literally have it in my system, in my notes, to ask if there's a 295 fee. But if there's a 295 fee, if I don't know about it, I don't know about it.
Right.
It won't land up on the closing statement, and then that 295 doesn't get paid out, right? And then you're mad at me, okay? But it's only because I didn't know. I have to know, because it's not in the body of the offer to purchase, it's not on the addendum A, it's only on the buyer agency, so I would need to know.
Yeah,
And so thankfully I've caught, I
Yeah.
don't think I've missed one. I don't think I have, but that's a pretty common question that I'm asking the coordinators, quite honestly.
yeah. So make sure that you get that
And
signed.
sometimes I'll email the coordinators and go, hey, is there a buyer agency on this one? And they come back with, oh, yes, there is.
Yeah,
Okay,
whoopsie.
I don't actually need the buyer agency, just
need
maybe,
to know.
just tell me, yeah, just tell me. You know, what I really like is when and I think the coordinators basically do this, is, hey, Scott, here's the offer to purchase, deadlines, boom, commitment, 2.5.
Yep.
Appraisal, 2.5.
Right.
Closing, boom, final price, especially if there's escalators. Like, I know how to read a contract, trust me, but I don't always know if the escalator kicked in or not, or something like that.
Yes.
So it is super helpful to just get a little snapshot of what's going on here.
Yeah, so you're not having to dig around. How does interest rate affect mortgage rate? Well, we kind of talked about that one already.
That was my question.
Yeah,
It doesn't. The question you answered.
we kind of did in the
Just because
beginning.
the interest rates go up does not mean the mortgage.
The Fed's rates. Yeah.
Yeah.
Yep.
Did we finish, I mean, maybe I spaced. As far as the situation, right, if they went with another agent and they do have buyer agency, what ends up happening if they did have buyer agency with Katie, then there are some legal things that go down?
Potentially, yes. If
Or is
they,
it worth it for us to chase something like that?
sometimes yes, sometimes no. If you, as an agent, drop the ball,
Yeah.
and you were not communicating with them, you were not returning phone calls, emails, then they can literally say they've been abandoned by their agent and they are going to seek another agent.
Right.
We have had some interesting ones in the past where literally one of our agents went to the closing table, and right before she went to the closing table, a broker called and said, that's actually our commission.
So the broker was in the driver's seat first,
Yes, had an agreement,
but ignored them.
ignored, yeah, so it can get sticky. So we're gonna talk about buyer agency and what that entails,
Okay.
in the protocol, because it can,
Okay.
yeah. Let's see, our interest rate set,
You answered it.
oh yeah, we did, thank you. Okay, can you touch on section 1031 of the IRS and how that works exactly when dealing with real estate?
I like that one.
I don't know what that even is.
I don't know what
It's
that
a
is
very,
either.
very specific.
So-
Is that you?
No,
So you're talking a Starker?
Yeah, like when you sell a property and you plan on investing that
Right,
those
right.
sales proceeds to another property.
Yeah, that's really it. I'm not an accountant.
I was gonna say that's an accountant.
Well, no, it's
question,
a 1031, also known as a Starker. So
yeah. Sounds like a stalker.
I thought that's what it said.
Like stalker?
it's actually a Starker. It's called a Starker account.
Okay.
So when you sell an investment property, you can put those proceeds into what we call a 1031. This is done by an accountant, not by a mortgage guy, so I'm not an expert, but I know it. You have, when you sell an investment property and you don't reinvest those funds, you're subject to capital gains taxes. There's a loophole. You sell an investment property and you put those funds into a 1031 Starker exchange, they call it, exchange, because you can have those sale proceeds sit there for a period of time, which I don't know, I think it's 12 months. And then if you reinvest that into another investment property, it rolls over. There's no capital gains taxes.
Is it the same for personal?
No. It's just investment.
So that'll be handled by an accountant.
That would be done by an accountant. Or I think a lot of title companies do it too, actually.
Okay.
Yeah.
So you can't use that to do primary residency?
And if you turn those proceeds into buying a primary residency, I don't believe that works, no.
It does
It's
not.
investment to,
Has
that's
to
why
be another
it's
investment
actually
property.
called a Starker exchange. You're exchanging one investment for
Yep.
another. It's like rolling over a 401k into an IRA. You don't pay taxes on that because it's going from one similar account.
But they do not earn any interest on that loan, so.
I don't know that.
I'm wondering if it was an owner-occupied duplex that you turned and bought, part of it as an investment. I don't know how that would work either.
Okay.
We don't know.
Yeah, that's.
We don't know some of
All right,
these.
so I just got stumped. All right.
Dumb!
Let's
Dumb.
I'm not a
Let's play stump
CPA. I'm
scout.
not a
Yeah.
CPA.
Is leveraging your primary residence against investment properties sound?
Yeah, so,
Okay, thanks. I
not
don't know.
that, anonymously, I think I know the guy who wrote that one.
I don't even know why I was looking at you, honestly. My
My
eyes.
question is just a basic, investment property question.
Yeah, since you tap into equity on your
What's a
primary.
better option? To take out a mortgage unto itself on an investment property, or to leverage the property that you have as your primary residence against the other one?
Why?
Is one more risk involved? Is it tit for tat?
Well, you just, using the word leverage is kind of the answer. So I guess a lot of investors, they will tap into their personal primary property with a HELOC or something along those lines and take that equity out and put it down on the new investment property. I guess it depends on how much are you tapping 100% of your primary? Like, I don't know if I would recommend that, I guess. What if the market tanks and now you're underwater, right?
Sure.
But the theory and the thought in there is that, like say you tap into your primary with a HELOC, a home equity line of credit, those rates are like 0, like really,
Right.
versus getting an investment property loan for 4.5. It's smarter, but I guess, I mean, are you really extinguishing every penny of equity you have in your primary? If that's the case, I probably, and you can't really, you can't, well, actually I take that back, some people do. I wouldn't take it up to 100% loan to value, I mean, that's for sure.
So if you have 3/4 of it,
Right,
3/4 of
Sure.
it, whatever,
Yeah.
15% down to get it, 20% down to get it.
yeah, let's say your house is worth 400 and you owe 200 on it, sure, why not?
Sure.
Take 100 grand and put it down on an investment property.
Yeah. That's,
Absolutely.
honestly, that's the way
If
to
your
go.
house is worth 400 and you owe 380, then no.
Because it's not gonna happen.
Because you can't. Number one, you can't go over 100, right?
Right. Okay.
Yeah.
Thanks, Scott.
Any other questions from anybody in the peanut gallery? Any questions? Guys that are on Zoom? You're all good? Okay.
There's up there, yeah, they're up there. The questions are there.
Yeah, did we answer those though?
Do mortgage rates change based on your credit score? Absolutely.
Yeah.
100%. So I hear this every day. So really 740 and higher gets you the best rates. Okay. Doesn't matter if you're 800, 790, 775. If you're over 740, you're in that category. Okay. And then from there, as you decline, there's adjusters, right? So at 740 is the best. I think 710, there's an adjuster. 690, yet another adjuster. Boom, 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 so on and so forth, until you get to 640. So absolutely, your credit score will 1000% affect your interest rate. Yep.
How does one find out their credit score before talking to you? Is there a, because I remember I was getting a car and I had some kind of app and I'm like, yeah, my credit score is
There's
this.
a couple free ones, right?
Yeah.
Okay, you can do that.
But then they went in, they go, actually, no, it's not. I mean, it wasn't that much of a difference. I went, oh, okay, well, that's interesting.
Oh,
Bless you.
Thank you.
All right, so this happens literally all day.
Yeah, I thought so, yeah.
So you check your Discover card, which got an app that gives you, you know, a credit score or Experian or whatever. Okay. First off, that's a very generic, vanilla credit score. Lenders, mortgage companies, I should say, we pull all 3 credit reports. We have to.
Okay.
Experian, Equifax, TransUnion, we pull all 3. We use the median or the middle score of all 3. You're seeing 1 score, we're seeing 3.
Yep, that's it.
Now, your generic score on your phone app also doesn't account for what you're applying for. So credit reporting scores are modeled based off the credit you're requesting. So if you're requesting it, let's just say you walk into a dealership and request a credit report to buy a new car, they might tell you you're a 710. You come in here to me, they're only pulling 1 report, by the way, we're pulling 3. That's modeled towards a car loan, mine's modeled towards a mortgage. Different. Okay, similar, probably in the ballpark, off a few points, but I've seen it off quite a few points. So yeah, so you're seeing generic scores, we're getting the real deal, and we're pulling all 3, and we use the middle of the 3.
Okay.
So if the 3 reports are 720, a 710, or a 710, 720, 730, for mortgage purposes, we're using a 720.
Makes sense.
Which
Yep.
could be TransUnion, and you are looking at Experian.
Right.
I was gonna say, I use I know of a website that pulls up all 3 for free if you guys want that information.
Sure. And legally, you can do that for free.
Yeah, absolutely,
You are allowed, I believe, it's 1 free credit report. I believe it's a
It's
year.
every year.
Yeah, I believe so. You can go to TransUnion, Equifax, or Experian in 10 seconds, get a credit score. You may not get a credit report. 2 different things. Actually, I just did this. I locked my credit report. That's what you can get scores within seconds, but you're not getting your report.
Right.
2 different things. It'll just go, well, here's your score, but it's not showing you your accounts, your payment history.
Is the score within, I mean, is it pretty accurate? If you,
Yeah.
Okay, but it's just not giving you the full.
Another thing to think about, because this actually happened to me with the seller, it was a pretty high-end house, selling it, they were gonna be buyers. Don't assume that their credit score is gonna be great. You know, you're hoping, but I think sometimes that mindset is, oh, you know, they've got this really expensive home and all is good. Well,
Oh, think about it this way.
yeah, don't do that.
I've been in the financial industry for my entire adult life. The more money people make, guess what? It's a good rule of thumb. The more they spend.
Ah,
So
yeah.
that's
Oh,
the American way.
yeah.
So these people maybe have huge credit cards. They might have huge car loans, things like that. So don't. You might be driving that Porsche and have a beautiful house on Lake Drive, but they probably have some debt too.
Yeah.
Or it's
Not everybody.
And it's
but
not
just
the credit cards.
right. But
Yeah.
you can't judge a book by its cover, kind of thing.
Right. So make sure you get them pre-approved before you go through that process of even listing.
Oh, I'm good.
Yeah, I'm good. Let's make sure. Let's make sure.
Yeah, well, you spend 1.2.
Yeah, exactly.
Right.
Any other questions?
Well, there's one up here too. What is the fair amount of time to expect a mortgage approval relative to the closing date? Is there a reason that some lenders wait until the last minute? Well, I guess in my world, I guess I can answer that 2 different ways. So we're mortgage companies, and in our process, we're prioritizing, in some respects, having it go through underwriting and getting a loan approval based on commitment date, right? You know, I can send a file in one day and get an approval, right? It might have a bunch of conditions on it, but I can get you a commitment letter. I base it off of and prioritize it with my processor and my team, sort of based off a commitment date. We're usually ready with an approval prior to commitment date. But to answer your second question, I guess it depends on how close the commitment date is to the closing date. So if your commitment date is 5 days before the closing date,
Yeah.
most lenders will send you the commitment date 5 days before the closing date.
It's how you write your offer.
So it's kind of how you write your offer, actually. Yeah, good point. That's actually a really good question.
That's a very good
So the
question.
big box banks, you know, I have a tendency, if I have a loan approval and a commitment, I'll send it to the team. I don't care if I'm 2 weeks early. I look like a hero then, number one. Number two, let's get it off the table and get that checklist, right? You know, let's just move on. The big box banks and some other lenders, they will send it to you on purpose the day it's due. So if it's due 3 days before the closing, well, that's when you're getting it for most lenders, I guess.
Right.
They may have had it earlier, actually, but they're not sending it to you until the commitment date.
I have a question for you. I had a property listed, 3 offers. The offer that we accepted, they were all very, very similar, so there wasn't a huge discrepancy. The offer that we accepted was, one of the reasons is the lender, the buyer's lender, so I'm working for the seller. I had the pre-approval, the whole 9 yards. The buyer's lender called me and said, do you have any questions? These guys are great. They're good to go. I had the pre-approval letter. It was a local lender. That phone call really meant something to me.
So the buyer.
It touched my heart.
Called you, the listing
Yes,
agent.
called me the listing agent.
That's pretty cool.
And I thought, that's pretty cool. So if that was something that, say, one of these agents is in a competitive bid, would you call that listing agent?
1000%.
Remember that, people.
Okay, I guess I'd have to, but that's you know what, that's my takeaway. I'm gonna start doing
I
that.
love it we have takeaway on the
So,
other side. Dang it.
I guess I'd have to know who the agent is, but I guess I'm smart enough to Google the address and figure it out myself, right? You know.
Yeah. Well,
So
it
I
was on
wouldn't-
the addendum A.
But I wouldn't
Oh,
have
but
an
you
offer.
wouldn't have it. So that agent reached out to that buyer's agent, reached out and said, would you call Janine?
Yeah.
Because I know
wouldn't
that
have an offer at that point, so I wouldn't have that.
you would have, yeah.
I wouldn't have it, so I'd have to dig up the listing agent's contact, but
Yeah.
that is a super good idea.
It really, I gotta tell you, it was very much across the board. But when I got that phone call, I went, you know what? We are gonna, well, I'm not, seller is gonna, that was great. I
Do you have
felt
any
like,
questions for me?
Yeah.
He can't get into too many details.
Nope.
You can say, hey, just
But
so you
he's
know,
confident.
they're super rock solid.
Yeah.
I've checked out everything A to Z.
yes,
No problems. Everybody's sleeping at night. This thing's going to close.
yes. And I gotta tell you, that was like, okay, we're done.
Yeah. Yeah, that's great.
All right.
That's awesome.
Okay.
It's good practice.
Good practice, I mean, in your spare time. This is really interesting. So bizarre that this happened. So the finance guy from my car dealership and just texted me and said, I'm not kidding you. Like, are you kidding? Is there an opportunity to work in mortgages if you have any recommendations on where or what company would be a good fit? Are you serious? I'm like, what?
Take a picture and send it.
Sitting right next to you.
Isn't that crazy? Do I have a tracker?
Yeah, you do, yes, you do, you're holding on to
Yeah,
it.
I don't put anything on
It's
Facebook.
gems in your
Yeah, it's like,
Is
what?
actually
I was
recording
just
right
like,
now.
what? Because
You
I
don't have
was,
to tell me that's his name, but what dealership? Because I know a lot of people.
Umansky Mercedes. He's been in the business for like 10 years. He's a whiz. He was, yeah, he was great.
Yeah. Interesting.
So anyway, that's another thing. All right. Any other questions?
No? I do. Can I touch on
Yes,
one
the condo thing?
real quick? Okay.
Yes.
So,
No, listen up, guys, because this,
I do a fair amount of condos, and I have been for a while. I think you're going to be astounded to know what happens behind the scenes, and it just got worse. Okay? So when we do condos, well, let's just put it this way. When we do a single family, we're underwriting two things, right? We're underwriting the buyer and we're underwriting the single family, right? With basically just an appraisal. Condos are completely different. This has always been true. We have to get the condo documents, we have to get the budgets, we have to get the insurances, we have to get the reserves, we have to do all of this. And that's never been different. That's always happened. Condos operate as a business and they get treated as a business, okay? So if something is deficient in the business, the condo association, there could be some problems, right? Unfortunately, we've had a couple of these. That's kind of why I'm bringing it up. So when there's deficiencies on condos, that's what we call non-warrantable. Fancy term for not financeable, period.
Cash.
They're not getting a conventional mortgage. They might find a lender that's going to do a portfolio loan or something. And there's certain things that make it non-warrantable that I can overcome, okay? There are some things that, even if there's a couple of check marks or some strikes, I can fix, okay? But here, pass this around while I'm talking. This is the standard condo questionnaire that gets done on all condos. Take a glance at it. It's crazy.
Questionnaire from who to who?
We track it down. So a condo project is managed by somebody, usually in a management company, okay? Ogden, Prospect, you know, whatever. 90% of them are managed by a management company. So if things don't check out specifically on this condo questionnaire, we could potentially have problems, okay? The big ones are too many vacant units, too many delinquent units, meaning they're not paying their association dues, too many investment properties. There's percentages to all this stuff, and if it fails, then it's called non-warrantable. Well, so that's what we always have done, and I think you guys would be shocked to see, even Janine probably, how big this questionnaire is.
I can't wait to see it.
They're crazy. And look at the questions. And think about what we're skating on thin ice on like every condo deal, I feel like. Well, it just got worse. So I gotta put my glasses on. So, you know, in the last couple of years, we've all heard the headlines. A couple of condo projects literally fell down in Florida, killed a bunch of people, unfortunately. There's a condo project in Waukesha as we speak that they want to raise because it's not safe and they kicked everybody out. That's just a recent story. So all these,
Yes, with the.
yeah, it's even right next to it, right here at home. So Fannie and Freddie are like, oh, wait a minute. So now there's an additional supplemental addendum that's required on all condos. Above and beyond that one, above and beyond us collecting budgets and reserves and insurances. So listen to some of these questions. This is happening right now in condos. When was the last building inspection by a licensed architect?
Oh my God.
Did the last inspection have any findings related to the safety, soundness, integrity, or habitability of the project? If yes, we need to have it inspected. If the repairs and replacements have been completed, when will they be completed? Provide a copy of the full structural inspection from the HOA or cooperative board, meeting minutes to document findings and action plan. It goes on and on. Are there any outstanding violations or zoning ordinance problems? Does the project have a funding plan for deferred maintenance? If so, we have to review that. Have you had a reserve study in the last 3 years? If not, provide one. So,
Is this nationwide or
this is Fannie Freddie.
can I make copies of this?
You can have it.
Oh, I love it.
I'll leave it. And I'll leave that one.
How
too.
much time does something
Exactly.
like this add to?
So if you know, ideally right now, these can be self-filled out with a phone interview. That's about to change though. So ideally all the answers are going to be no. But the problem that's happening right now is the big ones, the Ogdens and the Prospects, and all, they're like, we're not answering those questions.
Right.
You're not putting me on the hook for that.
Guess what?
No go. So we had a big meeting at our corporate office. We spent 2 hours on this right here. Actively speaking right now, we've got 4 or 5 not me, but our company, in the pipeline where it's not our problem. It's not you. It's not. We're not saying no. You're not saying. The management company's like, I'll have my lawyer review it before I fill it out, and we're not getting them back.
So deals aren't closing.
Well, we're gonna find a way, I guess, but it's a problem.
How does one go about having a reserve study?
That's done through the management company.
It is.
Yeah, and I think they usually do, but you know, these are some crazy questions.
As an owner of that unit though, don't you have a legal right to sell?
Well, yeah.
And if you have a legal right to sell,
Yeah, but with condos, it's always been true. You know, there's instances where it's non-warrantable, so that's never changed, right?
Right.
So you can have the legal right to sell it, but maybe your buyer can't get a mortgage. That's the problem.
When you're showing condos, or if I'm listing a condo, I always look to see past sales, and I've listed a couple that were non-warrantable. I had to make, guess what? Everyone that's purchased condos in this condo building pay cash.
yeah, I mean,
Just be careful, look at the history.
Too many rented out properties and stuff like that, but I mean, if I'm selling and I've got a qualified buyer, and the hindrance lies with the management company not turning over X, Y, and Z set information, then aren't they impeding my legal right to sell my unit?
Yeah.
So don't I then have,
You would have to then,
I would have to get a lawyer
You have to do
up to
something.
myself
right.
and say
But we are all running in, and I've got other lender friends at different companies like, yeah, dude, this is a major problem. Like, they're not filling it out. So now it's part of the standard, so I'll give you this. This is the smaller one's the new one.
Okay.
But it's crazy.
So
And it's
this is
required.
this, is that.
It's required for a conventional mortgage, period.
Is that on top of the question?
Yes.
That's on top, so now all of this.
I thought the small one.
Can we all get, or can you?
You can have that if you want to run copies.
Yeah, we'll run copies.
Yeah, I love that, that'd be great.
And so this is something that should be done as a listing agent.
So, good point. So, I've had the question many, many times, how do I find out before I write an offer if the condo is non-warrantable or not? The listing agent should know. If they don't, then the management company definitely should know. Really kind of a quick phone call. Hey, I'm about to take a listing at blah, blah, blah condo. Do you know off the top of your head, is this warrantable or non-warrantable? These management companies know what that means. Trust me, they know. And they know if it's warrantable or non-warrantable.
Oh, yeah.
They should, because they're all familiar with this new form right now. And I think it's probably going to change, but this has happened so recently and so quick that I think these management companies are like, oh my God, we got to get our head around this. Otherwise, nobody's buying condos. Like, this is a problem. So, but we're just in the beginning stages of this. And I've had a couple already, and the management companies, they went, no, really. Because they're like, we don't have the answers yet. Like, maybe I need to get a reserve study. Maybe I need a structural inspection or something. And maybe, think about the 2 to 4 unit condos. They don't have any of this stuff.
No.
They don't have management companies. There's none of this even exists. But this form needs to be filled out, period.
Is it exactly the same for co-ops?
Actually, I don't know, we can't do co-ops. So.
I live in a co-op. That's why
Actually,
this is very
actually,
interesting to me.
2 to 4
So the
unit
Newport, you
is
could-
different. 2 to 4 units different. That doesn't need that, actually. So far, we've had a couple of hiccups on this, but we've still closed plenty of condos since that these forms are getting filled out successfully and perfect. It's just something to be aware of that. You know, you get an offer on a condo, you know that your lender behind the scenes is doing a lot of work.
Okay,
Right.
we'll get these out.
Why can't you do
I'm not
co-op?
trying to scare anybody.
No, information is power.
Yeah.
Let's get ahead of it.
It's just, there's a lot. I think my point is, I think you'd be surprised on how much work behind the scenes a condo has always been, but just got worse. Yeah. Co-ops, you can't do a conventional mortgage on a co-op.
So the Newport, you couldn't do?
I'm not familiar with Newport, but
There's that huge condo building right next to,
Yeah, I mean, I know there's lenders that do
Is
them,
that newer, right?
but they're,
It's 1610 prospect is.
yeah, they'd have to be a portfolio loan or
I'm
something.
thinking of something.
I know you called me on yours a couple years ago.
Mhm.
Their condo association fees are like $1,800 a month.
Owie, it hurts me.
And what makes it a co-op, I guess, exactly?
Well, go ahead. No, I have a co-op in Florida, and it, unfortunately, well, when we
It's
bought it,
jointly owned?
we own the land on top. I mean, it's cooperative with all of the other units,
But there's
so
still
they
a
would not
management company,
finance
right?
it. You
There's still a
can't.
management company,
No, not in ours.
not in yours.
Which that's gonna change.
You just have more, so part of it is that all of everything is rolled into your stuff. So like all of the gas, all of the water, all of that, everything is rolled in, and that's why your.
And then it's
condo
divvied out.
association fees are.
Yeah.
I'm just curious.
Any other questions? This was very informative.
I was thinking of-
You are welcome.
And JSG will have the pleasure of seeing you again on Monday. And we're gonna be,
No, Monday,
No.
Thursday,
oh, Thursday?
Yeah, I can't be there.
Is it Thursday?
Friday, the lunch.
Friday, lunch and learn.
Lunch and learn, yeah.
So confused. Okay,
Maybe we can't be there because we were in another training group, but
okay.
we might have a separate.
But you know what? We're ahead of the game.
I just wanna.
Well, any questions that pop up after this, obviously feel free to reach out to me. Happy to help you guys out.
Thank you.
Should have brought some cards. but-
I was just gonna say, do you have a card?
No,
You
no.
bring any card?
It's always, it's saying, yeah, I'll get it to you. I have it
I just-
imprinted.
I wanna get my, handful
I could pick your brain for hours.
So, you guys all have a buyer agency agreement, and we'll wrap this up in like 5-10 minutes, but I'm not gonna go over line by line. I'm sure all of you are aware of what a buyer agency agreement looks like. Yes, you are! Thank you.
Thank you.
I'll see you Friday.
Buyer agency agreement.
Thank you.
Thank you.
Thank you, guys.
Especially as a new agent, this petrified me to discuss with a potential buyer. I was really hesitant to have the conversation with them. I didn't really quite know how to approach it. I sometimes didn't have them sign it until we were writing an offer. Not the way to go, because you're gonna be wasting a lot of your time. So if you're uncomfortable with it, we need to change that, because then when you do meet that potential buyer and you have confidence, and you're gonna fake it, honestly, because you're not gonna have it unless you've done this a few times, you're gonna fake it, and you're gonna get them to sign buyer agency with you before you go out and look at properties. So what I like to do is, let's say I'm at an open house, or a friend of a friend sent me somebody over, and they want to look at a property. You set them up on MLS, and you get a text. Hey, I just saw a property, can we take a look at it? If that happens, then I already know I've kind of not done my job. As soon as I get a lead from an open house, a friend of a friend, I am making contact with that person. And let's pretend it's in an open house. And they said, no, we're not working with anyone. You give them your card. You have that open house script. I really would like to sit down with you guys and meet with you one-on-one. I can do that via Zoom. I can meet you at a coffee shop. I can meet you at my office, whatever you feel comfortable with. I want to have a face-to-face with them. That is ideal. I bring a copy of, it's kind of like the listing agreement, or a listing packet, but it's your buyer packet. Very short and sweet. This is in it, your biography. If you have any personal stats, if not, you're gonna take KW stats. Very similar, but short. And this is what I do. Basically, guys, this is how I work. In the state of Wisconsin, unless I have a buyer agency agreement signed, I represent the seller in every single case. So in order for you to be represented, I need for you to sign this. There is a $295 fee, which guess what? You're not paying me today. It will come out at the closing statement. So moving forward, I'm gonna need this to be signed to work for you, and then we can move forward and start looking at properties. Okay, great. So what if give me an objection might be, but Janine, we just met you. And honestly, we don't know how we're gonna work with each other. That's a fair question. If for any reason I'm not returning your phone calls, your emails, I want you to call me and let me know, if you can get a hold of me, right? Because I can't, then I will terminate this agreement. I will amend it. Because that is super important to me, that we are communicating. How do you like to communicate? Is it text, phone call, email? So I'm 100% with you working one-on-one, but I need to have the sign. You know what I do, you guys? I would say I only work with X amount of buyers. This works all the time, I'm gonna tell you. And it has to be the truth. I work with 4 buyers at a given time. I have a slot open. And I would love for you to sign this so we can work together. Because I have a capacity in how I can service my clients. So by signing this today, I can start working for you immediately. It's really that
What if
easy.
someone objects to $295? That seems high, or I don't wanna pay that, or that was a cost.
Yeah, again, you know what, Katie, that's a good point, but you're not gonna pay that until we close. And by then, you're gonna be in the house of your dreams. I've negotiated on your behalf, and you don't have to pay me up front. How does that sound? You really won't get pushback on it,
Okay.
because they're not paying you up front. There is a KW agent in New Berlin. She has them write the check out right at that buyer agency meeting. $295, she gets it all the time. She said if you make a big deal about it, it's gonna be a big deal, right? So you just kind of,
Yeah.
right. So I always say my capacity is 4 buyers, and I would love for you to be, my 4th buyer. Pure and simple. Now, if they still don't wanna sign, and you don't wanna shove it down their throat too much, right? Because it's, yeah. This is what happens. They don't wanna sign it right now. They call you to look at a house. You're showing them the house. Bring this with you. And they'll say, okay, so what do you think about the price?
Yeah, I can tell you as soon as you sign it.
As soon as you sign this, you guys, I can tell you, I've done that and it works. They'll sign it. Honestly, I represent the seller, so I need for this to be signed for me to give you that information.
How would you approach if someone came to you ready to start looking for them, start the home buying process, but they haven't been pre-approved yet? Do you kind of
Ding, ding, ding.
take them to that direction
Yep.
and then do this?
Yep, so they have to have spoken with the lender prior to me meeting with them. Yeah, because you know what? You're gonna waste a lot of time if you don't. So here is who I recommend. This is your first step. Before we start looking at properties, let's make sure that we're utilizing your buyer power. And it's not to say that you are going to max out on what you're been pre-approved for, but really what is it gonna look like for you, so that I'm not showing you properties that might be out of your potential comfort zone. So let's go ahead and get that situated today. Let me know when you do, and I'll be waiting for your pre-approval letter, because that's how I work.
You can use that in your negotiating, right? I think you said something about that with especially with how the market is now.
Yeah.
We want to make sure we have everything in pocket, that way we can just go.
Because if we see a house that you love and you don't have a pre-approval letter, we're not gonna get that offer accepted. So it's, here is the buyer agency agreement, here are the lenders. I literally, in my packet, will have an offer to purchase. So if it's a condo offer, whatever it is, and I will go through and kind of highlight the things that I'm gonna be needing from them when we put an offer in on a house, especially if they're first-time home buyers. Even if they're not, if it's been a while since they purchased a home, how nice is it to have an offer to purchase, pretty much blank, highlighted of things that you're gonna have to fill in prior to them purchasing a property. They're gonna feel comfortable. It's not like you're sending everything over on zip forms, like, okay, here, sign it. They've never seen this before. They've never seen an offer. So I love to have that information for them. And I talk about you know, once we get pre-approved and we find the property, I want you to be comfortable with an offer to purchase and what it looks like. And I have highlighted the things that I'm gonna be asking of you, you know, some of which we're gonna get answers from your lender. How much money are you comfortable putting down? We're gonna find out what the interest rate is for the day. When you wanna close, all of these things that are gonna be, you know, good for you to be thinking of, especially if you have a lease, what is going to be ideal for you. So then you have that. I also, especially if it's a first-time home buyer, and I love first-time home buyers, I give them a copy of an inspection report. And I don't have the address on the inspection report, pictures of the exterior of the house, so it's pretty basic. But I'm gonna highlight some of the things that are typical that come up in home inspections, so they're aware of it. And I will tell them, and they will forget, you know what, when you buy your house, you're gonna walk in and you're gonna fall in love with it. And you get the accepted offer and you're so excited, and then you have the home inspection. And guess what? You have second thoughts. Your level of excitement literally, most likely will go downhill. That is typical. That is the process of buying a house. And if you tell them that, they're gonna be aware of it, and if you don't, they're gonna want to try to get out of it. So really, especially in this market, keep in front of your buyer and remind them that this is part of the process. That of course things are going to come up. Have them be aware of what a home inspection report looks like. Super important. I try to give them as much knowledge as I can so there aren't really a whole lot of surprises.
So if you are working with a potential buyer, but they're not pre-approved, how often are you stalking to see if they've?
You know, I guess I'm not going to be stalking them too much. Either they're pre-approved or not. Either they're going to want to work with me or not.
Right. So
Yeah.
give them the lender information and then.
Yeah, and then I reach out to that lender and say, hey, has Mary and Paul reached out to you yet? And if he says no, especially because you just met these potential buyers.
Yeah.
How long ago?
It was like 3 weeks ago.
Okay. Yeah. Hey, just checking in with you. I didn't know if you really, if you had a chance to check in with Scott or whatever at A Plus Mortgage. I just want to see, you know, where you're at with that and if there's any way I can help you. And maybe send them a new listing.
Yeah.
You know, even though you set somebody up in MLS, always watch it, because if you see something that you might think is a good fit, even though they opened the link, I still send it to them. Say, I don't know if you saw this or not, but what do you think about this one? FYI, or by the way, did you get pre-approved yet? So on and so forth.
At what point do you cut bait and run?
Yeah.
I categorize my buyers right away. Are they A? Are they gonna be willing, or can they buy in the next 45 days? Those are A buyers. I'm all over them. B, 60 to 90 days. Still all over them. But the A's are like, you know. C is anything beyond 3 months. I don't typically cut bait because I'm not actively, most likely, working with them because they're not an A or B buyer. I'm not going to be showing a C buyer if they don't have a pre-approval.
Yeah.
They're not really returning phone calls or emails unless they want attention right away. I'm not going to hop on them right away. I always let them know I'm working with X amount of buyers that are ready to go in the next 30 to 90 days.
Sure.
And those people have signed buyer agency and they are my top priority.
Just, in your experience, because I know you've experienced pretty much everything there is to experience. What if they keep saying, "Oh yeah, I'm gonna"?
Well,
Or,
then
you know,
let me
I'm
know
go-
when you do.
Yeah, and you do.
Yeah, you know, you don't want to put a whole lot of energy with someone that doesn't want to play with you in the sandbox. So I then put my sights on somebody else.
Okay.
Yeah, I don't drag them along.
Yeah.
Yes, my dear.
Question me.
Yes.
So you're not totally against sending listings through to people that haven't been pre-approved or haven't signed this yet?
I'll set them up because that's exciting. And I can also see when they're opening things up too, which I love. I love that. So I am not going to be out there showing them actively
Right.
properties unless for sure they have a pre-approval.
Oh.
For
So
sure.
then you'll do something maybe just like in a normal price range, like single family, something that people will most likely.
They're going to tell me their price range. What price range are you looking in?
Okay, so
By the
this is
way,
something that
we
you've already spoken.
yep, we'll adjust that once you get your pre-approval. And once you get your pre-approval and you sign by our agency, then you and I have a relationship.
Right.
And I'll be happy to serve you as a client. Yeah, I mean, you want to make it so they know you're serious business, whether you're new or not. They don't need to know. And that you are treating your business like a business. You're not out showing houses to people for shits and giggles.
Yeah.
You know, you're not there to be a door opener. You are a business person. Your time is worth a lot of money. So spend it wisely. You know, we get super sometimes caught up in, I have somebody, but really are they? You have to be careful in sales. Who you're
Yeah.
spending your time with.
Yeah, I had some friends of mine, who it's like they worked with their friends, or like their friend's grandma who works with this agent, and so they're working with them, they signed buyer agency, and they're like, because of that relationship, they want to keep the buyer agency, but they're like, hey, we know that, you know, you're an agent as well, is there any way you could look at it? And I was like, no.
So this is really interesting. 4 years ago or something, I met this couple at an open house, young couple, and they were new, they were renting, and they said, I did my open house script. They said, yes, we actually have an agent. I back off. They took a card though. So I'm like, okay, they took a card, whatever.
Yeah.
2 or 3 months later, they called and said, we do not want to work with the agent that we have signed by our agency with. How can we work with you? And I said, you have an agreement with your agent. You're going to have to ask that agent how to terminate it.
Yeah.
And they said, okay. So then they called me back and said, we've terminated it. And I said, do you have something in writing? And they brought in an amendment to their buyer agency agreement that it was expired, that it expired on this date. They brought it in. Then they were out to interview agents. So they did not have a good experience with this agent, who was, by the way, a very seasoned agent. And I met them here for an hour and went over what an offer to purchase looks like. It wasn't just sign the buyer's agent agreement. It was, how am I going to be a service to you?
Right.
I am your consultant, and this is how I work. Here is a copy of the offer to purchase. Here's what a home inspection looks like. What are your timelines? It wasn't as much of what kind of a house you're looking for, but how am I going to prepare you to purchase a home? And they walked out and they went, damn, no one ever sat down with us and did that. You know, they talk about the buyer agency agreement, and how they're going to set me up in MLS, but they didn't talk about how they were going to service me.
Right.
So I'm telling you, that's what people are looking for. It's not just sign this, here's our fee, work with me. It's literally having to sit down and going over why they should be working with you. You have the knowledge. And even if you don't, you do. Because you can always ask and get that knowledge from somebody. And practice. And practice. So next week, we are going to mock meeting somebody at an open house and sitting down across the table and how I'm going to present just what we talked about just a few minutes ago. What is in that packet that I have? How are you going to relay that information to a potential buyer? How are you going to be confident in getting buyer agency signed? Because once you have that part of it done, you guys, the rest is pretty darn easy. It's just a matter of finding them a home and negotiating. And we're gonna talk about how your offer could be the best offer. And I think that was a good aha for Scott to hear that now lenders are reaching out to those listing agents, because I'm telling you, that's important.
So that was perpetuated by the buyer, right?
It was
lender didn't call
perpetuated by the buyer's agent.
Buyer's agent, okay.
Yeah.
All right.
So awesome.
Mhm.
Yeah, that was a good one.
Oh, she's got a question.
Hey,
Yes.
Janine. Hey, so are there any opportunities for a new agent to shadow somebody as they do a buyer agents, this kind of a presentation? It's just so we kind of see how it goes.
Yeah, I mean, that is up to that. That's up to you, Sarah, to reach out, on social media, the KW Facebook page.
Not that I'm free.
Hey guys, any of you going on a buyer agency meeting that I could attend and watch? Yep. Yep.
I can vouch for that. I have sat in on many buyer agency consultations just by going up to people after team meeting and saying, hey, you seem like a really great resource. I would love to join you with whatever, and I mean, I've never been turned down. So most people at KW are like happy to share all that information.
Absolutely. And I honestly think that more and more savvy buyers are reaching out and interviewing different agents, because they all talk. I've got a slew of buyers that I had been working with from Fox News, and it was one person referring me to one anchor. They interviewed me at a coffee shop, and I was nervous. This was like 3 years ago. I was nervous. I'm like, oh my God. And because you really don't know what they're looking for. You're going to find out when you're there. And then from there, they're going to refer you to their people because you did such a great job. So it's more than just finding out what they're looking for. They want to hear from you, how are you going to service them? How are you going to be better than anybody else? And I think the number one thing was, what is your availability? Are you going to be around? And if you aren't, is there someone else that will be? And if you are a busy agent, or even if you're not, it could be within 24 hours, you've got 4 or 5 buyers and you can't do it all. Always say, if it isn't me personally getting you in that door for whatever reason because of this market, I will make sure that you get in one way or another, right? That's all they want to hear, is that they will be able to see the property if for any reason you can't be there to show them. And it will happen.
Please.
It will happen. You can't be 2 places at once.
You've done that.
Yeah. But they want a leader. They want a leader. They want someone that's going to take the reins, make it pleasant. It can't be all serious, because they're going to go, oh my God, this is going to be like zero fun. You want to show your personality through it, and but that you mean business. They want to work with someone that is literally not going to waste their time with buyers that are not serious. I mean, if I were a serious buyer, I would not choose an agent that's running all over, Milwaukee, showing properties for the sake of showing properties. Like, if you're one that gets a ton of Zillow leads and you're, taking every Tom, Dick, and Harry on a lead that really, you don't have a pre-approval, you don't know anything about them, I'm not going to choose that agent to represent me, because where's their head at? I take 4 clients, and that's my comfort zone, that I can service you 100%. And do it that way. Right? Okay, guys. Well, see you next week.
Thank you so much, Janine.
Thank you.
Thank you.
Appreciate it, Janine.
Yeah, thank you guys.